Welcome back again, ladies and gentlemen. It's your host Moloko from Market Maker Secrets. So on this slide, we'll be covering the most important part of this course, or the Market Makers Secrets trading system. This, of course, includes high probability trading setups, entries, exits, rules of engagements, and confluences. So we're gonna start off with technicals, and then come to market makers and the confluence of technicals, market makers, and fundamentals. But then again, I'm gonna have to remind you that in terms of technicals, we're not gonna look much into technicals. But then again, we've covered market makers. So right now, the most important thing is looking at this confluences between market makers, technicals, and fundamentals. So without wasting any time, we're just gonna go straight into it. So this is how it starts. Basically, before you can start trading any technicals, you just need to make sure that you have a minimum. You have to make sure that you have a minimum of like three confluences. For me personally, for me to trade a harmonic pattern, I wouldn't just trade an advanced pattern or harmonic pattern because of there's a Hartley cipher pair, total or butterfly. It needs to have some other things like support and resistance, or trend lines or trend channels, Fibonacci retracements and extensions, moving averages, or a simple pattern. So we're just gonna look at few examples that I've already made, the work that I've made previously that includes technicals, market makers, and fundamentals. But then with regards to fundamentals, I'm still gonna show you how you can really incorporate fundamentals in your trading. Because you can't just woke up any given time and say I'm gonna trade fundamentals. You need to look at your economic calendar and then translate what you've seen on your economic calendar into your trading charts. So with regards to technicals, we know that we don't like trading technicals as much as market makers, but then the trick is in using them both at the same time. So instead of taking there's a category one type of signal, it's just technical. So when you see when taking a position and it's only technicals, it's a confluence of a harmonic pattern or maybe just support and resistance, trend lines, and Fibonacci. It's a good high probability category one pattern, because it has everything that is from the technical side of this part. This, I don't know how to put it, but I hope you get my point. So when you trade technicals, you just need to make it a point that you trade, not just one simple pattern or one harmonic pattern or just support and resistance. Just put them together. Have at least minimum of three confluences. Then for me, that's enough reason why I should enter into that position. And then secondly, it's market makers. So we've already done market makers. I bet this course it's all about market makers, advanced market makers. So we've already covered this area. We know what the accumulation phase is. We know the stop hand, the reversal, and then these are the only three things that we need to concern ourselves with. Accumulation phase, we see it, we enter on stop hand, and then we ride through the long sustained run, and then we re-enter or close on reversal. So number three, it's when market makers meet technicals and fundamentals. So this is the most important part of it. So we're just gonna look at this category three type of setups, and then it's very simple and straightforward. When you see a setup forming up and it's only technicals, it's a category one. It has low probability, and then when you see a setup happening and it's only market makers, it's a let me just say a medium probability type of setup. So you want to take that, and then when you see technicals match market makers, and then that's a kill right there. You understand? So just make sure that you're able to spot the market makers and technicals converging all at the same area. So let's just get straight into it. So I'm just gonna show you. Let me just put this here. So for now, I want us to look at only technicals, because as you can see, there's also market makers here. But then let's just ignore market makers for just this time. So I want us to look at just technicals. So as you can see on this flashcard, I have a bearish harmonic, not harmonic, continuation pattern, which is a flag pattern, and then where it is, it's on major previous support resistance. So I already have two confluences on this setup here, because there's major harmonic pattern, not harmonic actually, continuation, some simple continuation pattern that is on previous major support and resistance area, it's retesting that that high probability area there, because this was support resistance. It came down here, and now it's coming back to retest again. So before it comes here, you already notice that there's major support and resistance, and this is an area that you should be very interested in taking positions from. So support and resistance, and there's also bearish continuation pattern, which is a flag pattern here. And if you look closely there, there's also an 800 moving average that is in line with the trend. So no matter how you trade, just make sure that you trade in line with the trend. That is the other most important thing. Always trade in line with the trend. Stop counter trending, ladies and gentlemen. So we've seen here, and if you can look closely here, there's like harmonic pattern, because like X, A, B, C, D, and then it didn't violate. It actually did violate just a little bit, maybe with like 2 to 5 pips. You see this high is a little bit just higher than that high. So for me, that was a harmonic pattern, but it was what do you call the word? Okay, it's cool, but then it was invalidated. Yeah, that is the word, invalidated. So X, A, B, C, D, this is where you want to enter a position. So, and then if you consider also Fibonacci, this might be a 50% to 61.8% Fibonacci retracement, but this for me is a 50%. So one, it's a simple continuation pattern, a flag pattern. Two, support and resistance. Three, Fibonacci retracement, and then four, just nearby, just close to a moving average. So it's almost four confluences with regards to technicals only. So let's go to the next one. There it is. It's the same pattern. It's from the same setup, but then in this case, remember, now it has retested again and retested that moving average again and retested that previous resistance, retesting it again. So this is a very major, high probability trading pattern. As you can see, this was a breakout from this lower trend line. It broke below and then coming back to retest again. So it's at the same time, it's a breakout, it's a harmonic, it's a continuation pattern, it's a major support and resistance, moving averages, and also Fibonacci there. So that's 50% to 618 Fibonacci retracement. So it's also a very, very good high probability. So if you didn't take a position here, now it's an opportunity to re-enter again on that what do you call, resistance there, or the resistance retest there, or the breakout retest, whatever that you're comfortable calling it, it's okay. So those are only the technicals. Here's another one. I hope you are able to see this here. This is a major resistance area, diagonal resistance, because you can see it's a trend channel, but it's bearish, so it's looking downwards. And also you can see our moving averages are pointing downwards. This comes after this here. As you can see, after this pin there, the spike there, here it is, and then now it's coming back down here. So what it does, it starts to range again, range for like 1, 2, 3 weeks. The fourth week, which was the second week of the month of July, and then what it did, give us a retest on that resistance there, and then it giving us a harmonic pattern. What else? And there's also like a continuation flag pattern there. So it's like in terms of Fibonacci, I'm not gonna go into that because there's a harmonic pattern there, and then it looks like it's a Gartley. Yeah, I think it is a Gartley. So it's a Gartley there. That finish up that completes on 78.6, and there's major resistance there, number 2. Number 3, there's 3. There is harmonic, not harmonic actually, continuation pattern. And then what do we have? Number 4. Now for me, this is good enough for me. I already have 3 confluences with regards to technical, so that's a very good position for me. Good area to take a short position. Here's another one, major support and resistance area on that moving average. There's also like harmonic pattern and a continuation pattern there. So continuation pattern number 1, harmonic pattern number 2, major support and resistance number 3, harmonic pattern number 4. And then if you can measure our Fibonacci from the previous high to this low there, I think we will realize that this is a 38.2 Fibonacci. Not from here to here, but from here to that previous high there, which is above what we can see on this chart here. So we have almost up to 4 confluences or convergences on this chart there. On this one, from here to here again, we have continuation of the trend. And then we're not looking at market makers, although it looks it's a proper second week stop hunt continuation of the trend. But then we're just looking at technicals here. Number one, what do we have? What is very visible? We do have major support and resistance area. Number two, we have continuation pattern, a flag pattern there. We don't have any moving averages. I think in this case you only have two. You have two convergences. With regards to Fibonacci, this is, I think this could be a 23.6, 23. It's nowhere near 38%. This one, so it's also good high probability. We're not looking at market makers or TDI. We're just looking at moving averages, price action, and then simple continuation pattern and harmonic patterns. So another one, we have major resistance there, 1 2 3 4 touches to the upside, and then it's a major resistance area. So in terms of technicals, that's what I'm seeing with regards to this one only. So I'm seeing major resistance which came, price came and retested this high is 1 2 3 4 times. So that's a high value area. So I was expecting a little pin dead on the upside, so that market makers can stop out everyone that is sold and put the stop losses just above this highs, 25 to 50 pips above this highs. So that's where you should also start putting your pending orders. If you notice this type of an area, just know that retail traders have put their stop losses just above those highs, 10 pips, 15 pips above those highs. That's why you want to put your pending orders, your sell orders there. So going forward, let's see what do we have else. Continuation from that slide there. As we can see, we have major support and resistance. It's the same thing over and over and over. So after having price coming back from this area, it broke below this as support, broke below. We know it has to come back and retest, because this is major support, and then it needs to come back and give us a retest on that support as resistance now. So we see that, we take it. Not only that, and then there's a good harmonic continuation pattern, which is a flag, and then it's like 38.2 Fibonacci retracement with regards to this price action here. So it's 38% retracement. There's also a continuation pattern, and there's also support and resistance. It's just near the moving averages, but it doesn't really touch that moving average, so we're not gonna go into that. So it's also a good high probability. As you can see, I've only talked about setups that have three confluences or convergences. So let's go to another one. There's another one. It's in line with the trend. It's a Fibonacci retracement. There's also major support and resistance there. There's diagonal resistance. There's also a horizontal or resistance there. So when price comes back and comes back to retest here, so you know that there's a high before it even lands here. You wanna put your pending orders around this area. So that's a harmonic pattern right there, and there's also like a continuation pattern there and support and resistance. So basically, when you have a harmonic pattern or a simple pattern, just make sure you have a Fibonacci there, or major support and resistance, or a moving average. So it could potentially be a high value or high probability pattern right there. So this one, there's not much there. It's just in line with the trend, and it has retested that breakout of that resistance there. So it broke below, came back to retest, and then broke the previous low, and then now it's going back to retest the previous high there. So it did exactly that. This is an area that you might be interested in taking, but there is no lot of confluences, convergences on this area. Although it did move very heavily, but then we didn't have a lot of confluences there. So if you're like me, you will be able to take this type of positions, but then you need to have conviction and assurance that it's gonna go in the direction that you had anticipated. You understand? Because initially I wanted to take my positions here on that moving average, but then I just let it be, and then give me signs of reversal, and then if it does that, then I know I'm gonna be comfortable in taking a position. But I don't like taking a position that I'm not very sure whether it's gonna go up or down. I wanna be able to take 5 positions on that one setup. You understand? So let's move along. This is a very nice one as well. As you can see, the trend is going down because there's like a diagonal resistance there. So it did retest that after, I think this was the first week. So it gave us the lowest price of the low price of the previous month. From there, it rallied up, retested that trend line because it's going downwards. and then as you can see, man, it's still trying to, accumulate more positions before it could finally go down. And then after, having accumulated enough positions, they will just go down, completely. So as you can see, there's a cipher pattern there that has retested a bearish cipher that has retested that resistance area. And as you can see, there are two resistance areas there. There's diagonal resistance and there's also horizontal resistance. So there's horizontal resistance 1, diagonal resistance 2, and there's harmonic pattern 3. So it's a very good high probability setup, which is in line with the trend. And then another one, it's almost like the same thing over and over. So I'm telling you, ladies and gentlemen, if you're able to identify these types of setups and know how to categorize them properly, then you will know which which setups have high probability, which setups you should be aggressive on, and so forth. Like this one, this was very good for me, and I capitalized heavily on this one. So it's like it's a downtrend, as we can see, and then there's also resistance there, which is diagonal. The price is moving within this bearish trend channel, so you want to sell this when it retests that resistance here, and then you want to sell that, not buy here on the support, because it's this is against the trend. So first things first, what do we see? We see a harmonic pattern number 1. It looks like a Gatli. It is a Gatli. It's a Gatli. Number 2, it's there's also a continuation pattern, which is a pennant. Number 3, there's a diagonal resistance there, and then that is our number 3. What else do we have? We don't have any moving averages there, and then we're not gonna go into Fibonacci because we already have, what do you call a harmonic pattern. So when you have a harmonic pattern, your Fibonacci is already being taken care of, because there's no way that you can just assume this harmonic pattern without having to measure it. So when you measure it, you already understand that this is 78.6 Fibonacci, and then you see where it completes on that area there, which is a major diagonal resistance area. And then let's go to this one. This one, it looks very, very good, because this you see, it's a first things first. Like as you can see, it's a major downtrend, and then price retested from here. Now we go to here. From that retest there, it went downwards and then gave us a nice bearish flag, and then on that flag there, as you can see, there's major resistance, because it's head and shoulders. The right shoulder is exactly where the left shoulder is, you understand? So for me, there's a high value area. There's also moving averages. So like there's a two harmonic patterns, and not harmonic simple patterns. There's a reversal pattern and a continuation pattern. So it's like left shoulder, head, and the right shoulder, which is head and shoulders. That's the first pattern that we see. Second pattern is a bearish continuation pattern. That's number 2. Number 3, there's a resistance there, which is very good. Number 4, there's moving average there. Number 5, it's like 52, 38.2% Fibonacci retracement from this low to that high. So this is 50%. So we have 5 convergences on that same area. So this was a very high probability setup. So if you're able to identify this type of a setup, you take it, you kill it. This is how you use confluences, but only looking at technicals. Remember, we're not looking at market makers, ladies and gentlemen. So another one, breakout, coming back and retest. There it is, support and resistance. There's no significant Fibonacci ratios here, it's just support and resistance. There's also 50 moving averages there, 50 moving average, retest. And then if you can look closely, it's just that we cannot really see very closely, but then as on the previous videos, as I've explained, there's moving averages. So you can also look at 3 and 13 moving averages cross over 50 and 13 and 50, 15, 200, 200 and 800. So continuing, what do we have here? We have major resistance area, and then we have trend line there, breakout of this trend line. You can see this trend line. We have breakout coming back to retest, which is number 2. We have moving average number 3, 800 moving average retest number 3. There's a Fibonacci retracement here, 50% Fibonacci retracement, so 50 to 618 actually. So this looks good. We have 4 convergences on this chart, only looking at harmonic patterns. What else do we have? Technicals, we don't have much with regards to technicals. It's still this very same setup there. So continuing with that from the Friday midweek reversal, but we're not going to go much into technicals. So I think that is it with regards to confluence of technicals and of just technicals, not in market makers. So right now we're gonna look at technicals of not technicals, confluence of market makers and technicals, and I also show you how to incorporate fundamentals on the setup that has confluences of market makers and technicals. Ladies and gentlemen, I hope this everything that I'm talking about right now makes sense, and I hope you're able to hear me properly and understand what I'm trying to say to you. So okay, let me just just a minute, let me just do this. So now we're gonna look at confluences of only market makers, because right now I think we've covered enough of technical confluences of technicals. Right now we're gonna cover confluence of only market makers, looking only at market makers, different, uh, I don't know how to put it, but let me just open my chart and try to show you what I'm talking about. So without wasting any time, let's get straight into it. We still want to look at the same setups that we talked about, because is this, you just need to have that 3D eye, be able to identify what you comfortable trading, and so forth. So what's happening here? We have I'm only looking at this week here, because it has a lot of market maker confluences. So you can see we got a proper stop and low, the level 1 correction, level 2 correction, level 3. So on that level 3, it's 3 days of rally, and then with 3 levels, and this is Thursday, so obviously you expect a midweek reversal. So for me, that is how I put that is how I would say this. For me, it's a 33 trade, because it's 3 levels on 30 days, so I'm expecting a reversal right there. So for the fact that it's in confluence with that major support and resistance, it's a kill for me, you understand? So that is how you incorporate your market makers with technicals. You see this a level 3 on the 3rd day. After 3 days of rise with 3 levels, you also look at your technicals. What do you have? You have harmonic, not harmonic, some major support and resistance there. You have a completing continuation pattern there. There's no moving average. It's very close, but then it doesn't really touch it. So that's a very good one for me with regards to market makers. So after having noticing this, you will first look at your move, because you've already seen that this is a high value area that the price is most likely to retrace from. So from now on, if you're not very sure, you want to wait for like what do you call that? You want to wait for confirmations. You just wait for candlestick for confirmations, your morning stars, evening stars, spinning tops, morning stars, yeah, like I said. So, and again, you look at your moving averages. First moving average, crossover 3 and 13. After you see that, you take an entry, and now that, because it's confirmed that it's an area that the price is reversing from, you take a very big nice heavy positions. I'm an aggressive trader, so when I see setup like this, I'm not gonna take one position. I'll enter like 5 to 10 positions, opening like whatever position size that I'm comfortable with, and that's gonna allow me not to blow my account, even if I was wrong for like 50 pips, even if I get like negative 50 pips drawdown, I will still be able to handle that, because I don't over leverage, I don't over trade, I don't open more than what my account can handle. You understand? So number one. Number two, the same thing is happening again. It's coming back to retest, and now it's like it's on level 3. It's still on level 3 because it's on level 1, level 2, level 3. And remember, it doesn't take out that previous high. So this area, it's still that reset area, or an area that you are interested in taking a position from. So remember, Thursday midweek reversal, and then price came back, gave us 2 levels, and came back and accumulated the second week on Monday. It didn't give. Remember, we were waiting for a proper stop and high, but then we didn't get there. So we wait for whatever that we're comfortable in taking. I was waiting for price to come back around those areas, or retest that moving average. It didn't give me that on Friday, on Tuesday. So if it doesn't give me that on Tuesday, I wait until I get my thing either on Thursday or Friday midweek reversal. It did exactly that. It didn't give me my stop and high on Tuesday. This is an inside structure shallow stop hand. So for me, it's not good enough. But then this one is a proper reversal. You can see how much it took out those people that had bought there, had sold here. People that has sold here, they put their stop losses a few pips above those highs. People that bought here, that sold here, they put the retail traders, they put their stop losses 5 to 10 pips above those highs, and or 25 to 50 pips are just above those highs. And then, because market makers know that, you see what happened here. They came back and just gave us a little pain. As you can see, the pain there, it goes like 5 to 10 pips above the previous high. What did it give us that? Because it wanted to take out the people that had stop losses above those highs there. We know that. We know how retail traders trade. So when you see this type of a setup, don't put your stop losses with the retail traders. Put them a little bit higher there, because you know retail traders have theirs here. So when you see that, that's where you put your pending orders, sell orders. It comes back and then takes you in, fills you in, and then there you go. This is order flow, ladies and gentlemen. You need to know how to put your pending orders. And then after you get in here, because you know it's definitely gonna take out this lows, because this is the second week, and then it didn't give us a stop and high on Tuesday. It instead gave us a reversal on 1, 2, 3, 4 on Thursday, which is on look at it this way. It's major support and resistance. There's a harmonic pattern. There's a continuation pattern. There's moving average there. What else do we have? It's Thursday midweek reversal. It's second week of the month, so it's a high probability setup. Look at how the price fell from then. It's like it plummeted, like from that high there. Give it like 200 pip downfall in like a few hours, 4 hours to be precise. You understand? So that's a very huge move. So you don't want to miss this type of moves. So you want to be able to you also want to be able to anticipate this type of moves, because you know when you know your things, you know how price is gonna move, and then on average per month, how much is it supposed to move from the highest to the lowest price of the month. You should be able to calculate your numbers, like as I've said. So here's another one. This is a very good one here. Here's another one from this low price of the month. One, two. We only have 2 levels, because you can see this is the lowest price of this month, and then give us a nice rally. Came back, didn't check out the previous. So this is level 1 correction. So we can't say this is level 2, because it needs to be higher than the previous high. So it's level 1 correction, level 2. So we only managed to get level 2 levels. So because this is not a level, because it doesn't violate that high there. So if this high was above that high, then for me I would be comfortable or obviously this level 1 and then level 2 and then level 3. But then for now there are not 3 levels. It's just 2 levels in like 1, 2, 3 or 4 weeks. You understand? So but then, because of you have already identified this area, regardless of whether it comes on Monday or Tuesday or Wednesday, the fact of the matter is that it came to that specific area that you anticipate the price is gonna go to. So when it comes to that area, you take it, you kill it. You understand? So it came to that area. There's harmonic pattern there, and then second week of the month, which we're expecting stop and it didn't give us that Tuesday stop, and instead it gave us on that accumulation day, it gave us stop and high. I think it's New York Open. Give us a reversal on New York Open, and it went down. You understand? So that's a harmonic pattern there. There's continuation pattern there, and there's also major diagonal resistance there. So for me, that is good enough. So that is how you incorporate your fundamentals, not fundamentals actually. Excuse me, your technicals and market makers. This is very important, ladies and gentlemen. No matter how long you've been trading, if you do not know how to incorporate this or how to put them together like this, you will not be profitable, or you'll only be profitable half of the time. You need to know where the price is going to be for when is, like, for instance, let me put it properly. You need to know where the price has been and where it's gonna go next, on what week, on what day, on what time. That is precision. You need to be very precise. Don't be like those people that only take chances, or they're not sure. They just they speculate. We don't speculate. We follow where the money goes. Where the money is going, that's where we want to go as well. You understand? So this is a very good one as well. There's a harmonic pattern there. There's a continuation pattern there, and then there's also a moving average there. There's no significant market maker cycle pattern there. As we can see, the price gave us a nice stop and high, or maybe this was a reversal on Monday. This is the same setup here. This one is the same thing. So you can see it was a very nice one. After how many levels of rise in how many days? 1, 2, 3, 4. It's 4 levels. I hope now you can see how levels for me they are inconsistent, because you can see 1, 2, 3, 4, 4 days of rise for 4 days, 4 days of rise for 4 levels. So that for me that's good enough, because each and every single day has its own level of rise. So I would consider this as a reversal, even though there are no much reversal patterns here, but then there's continuation. Remember, there's a very strong bearish trend, so you wanna always trade in line with that. So there's the support here, broke below, coming back to retest that support and resistance, and then it went down, came back, retested that previous support as a resistance, and there's confluences there. So for me, it's a very high probability setup right there. Sometimes you don't need to have a lot of convergences or confluences. You need to have high value or confluences. Like if you have a harmonic pattern and a continuation pattern, support and resistance, Fibonacci and moving average. For me, they add a lot of weight to any setup that you have. Fibonacci, moving average, continuation pattern, and a harmonic pattern, and most importantly, support and resistance. I don't go anywhere without support and resistance. For me, my number one thing that I have to look at before I take a position, it has to be a major support and resistance. So if I see that, I will clearly know that is my type of setup. You understand? So you should have your own setups, have your own signature setups. When you see it, you take it with conviction and confidence and everything there is in your will to heavily profit from it if I'm putting it properly. So the other one, this is a simple and it's straightforward, and it is very high probability. Let's choose the second week, not second week, the third week. Remember, on second week we got our proper stop hand. No, this wasn't a proper stop hand because I thought this was it. 1, 2, 3, 4, 5. So this was a 5 weeks month. So this was the first week. The second week we didn't get a proper stop and high because remember we're trading in line with the trend. So I didn't want to take a long position here because I'm only interested in trading in line with the trend. I see this, I leave it. Then I'm gonna only take this after having analyzing properly that it's a continuation of the downtrend. Then for me, I will take it with no doubt. So after having noticing here, I took this position, right, and then it still came down, and then it broke below this lows here. When it does this, I already put my pending orders around these areas. I know it's gonna go. I have to take another position. If it comes back and retests that resistance as support from support, if it comes back and retests this support as resistance, the price will find my pending orders right there. I'm not even gonna think twice. When I see a high value area, I put my pending orders and I look at other pairs. Put my pending orders and put my stop losses. If ever I'm wrong, I'm gonna get stopped out. If I'm right, I'm gonna get filled in and then I'll come back and then just break even, just to make sure that I'm on free trades. You understand? So it's very important that you should also use proper risk and equity management. You should know where to put your stop losses, where to put stop pending orders, when to take profits, when to cut your losses, when to let your profits run, and so forth. Because it's no point to lose like five trades consecutively and then wait the first trade that you win, then you don't let it run, you carry it short. Like, why do you do that? Let it run, so that even if when it makes profit, it gives you back whatever that you lost on that previous losing trades. With it also looking at your risk reward, because when you have a good risk reward, you'll be able to lose 5 positions, and then with this one winning position, you should be able to cover all those 5 losing positions with just one winning position. You understand? So I hope that makes sense. So for me, that was very good. Tuesday stop and high that is in line with the trend, which resists previous support and resistance, and we also have a continuation pattern there. So that's a high probability pattern. Remember, we're not looking at TDI and moving averages in this case. We're just looking at price action and market makers. So if ever you see that, and then maybe when it came to that area, maybe you were not on your charts. But then when you come back and you see that it gave you that nice retest on that previous support as resistance, and there's also like a beautiful continuation pattern. And then when you come back, you see 3 and 13 moving averages has already crossed. You take it. You don't wait for it to come back. It's already crossed. It's a signal that it's not coming back to those highs. You understand? You take it and then you relax. And then when price moves 20 to 30 pips in your favor, you break even and let it run. Understand? Then you will start, looking to take profits when the price, it's on major support, or when it's at golden Fibonacci extensions, because 38%, 50 and 618 my golden Fibonacci retracements, and then 127, 141, and 161, they're my golden Fibonacci extensions. So if I take my if I enter it at 38% Fibonacci retracement, I'm gonna have to take my target in 161. If I enter at 50%, target is 141, and then if I enter at 618, my target is 127. So because this one is it's not touching 38, so it's a signal that there's a very strong trend. So when it's a strong trend like that, after entry, it's not gonna waste a lot of time still trying to accumulate positions there. So it's supposed to be going straight downwards, and then you're just looking at where you're comfortable in taking your target. You understand? Personally, I don't trade with take profits because I'm a trend trader. I always trade with the trend, so I don't want to limit myself with regards to how much profit I want to take, or the peps that I want to accumulate. I don't want to limit myself because we're already limiting ourselves with stop losses. My maximum stop losses are 50 pips. So I don't put take profits when I'm in a winning position. I just let it run, and then when it moves further and further in my favor, I will just book profit accordingly, according to my trade management. So put my stop losses below the previous lows if I'm trading intraday, intra-week, intra-month. The same thing goes. So if ever I'm trading intra-month, I have my, if ever I enter here, price goes down, it comes back, it enters the retest here, and then I re-enter. Obviously I'm gonna, here I've already broken even, so it's a free trade. And then when it comes back like this, I have five positions here. When it comes back like this, gives me a low price like that, or gives me this, I will just close maybe 2 positions, and then keep 3, and then those 3 I'll just put them above those highs. If it comes back like this, I'll put my stop losses here. It gives me another low, my stop losses there. It gives me another low, my stop losses there. You understand? So it comes back, gives me this, my stop losses are still above those highs. It gives me that it doesn't take out those highs there, which means my stop losses are still properly placed. And then I re-enter here, it goes below here, it closes, and then I break even again. After breaking even those positions, I take those stop losses, I put them above those highs here. It goes down. From then on, I take those stop losses, I put them with this break even, with this the position that I've broken even here, because now I have like 3 positions that were left from the previous week that are in heavy profit, and then now I have 5 positions that I just entered now, and they're also on free, or it's like free, no risk. You understand? I let it run. It gives me a low, I put I put my stop losses here. Then it comes back, it retests here, and it ranges. I put my stop losses there. It goes below. When it gives me that, I put my stop losses above there. It gives me that my stop losses are still around those highs there. It gives me that if I don't have any low, I'm not gonna move my stop losses. It comes back, gives me that again. I put my stop losses above there. It comes back. This is the 4th week of the month. Obviously, I'm expecting reversals. After this lows here, it comes back. It gives me that. I put my stop losses there, or maybe around those areas. I would consider taking because this is Tuesday, Wednesday stop band, and then the 4th week or the 5th week of the month. So I'm expecting reversals. This is where I will take my profits and then re-enter again, because I know that this is the proper time to counter trend. You understand? So you should basically know when to counter trend and not when to counter trend. So I hope that makes sense, ladies and gentlemen. This is a very good one. But then here there's like major resistance there, and there's also like level 1 from Thursday, level 1 correction, level 2 correction, level 3. So on that major resistance there's like 3 levels of rise in 3 days. So it's like 33 trade on that moving on that high value area. So 33 on that high resistance area. So that's a high probability area. On Tuesday stop and high, and then after 313 moving average, that's a very huge clue. So 313 moving averages comes back, and you see how moving averages are lined up together like that. It's a signal that this thing has been ranging for quite some time, for like 1, 2, 3 weeks. So after this, you should expect a very huge downfall. It did exactly that. We entered, and then gave us that nice 50, 200, and 800 moving average crossover. So when you see that crossover like this, 50, 200, and 800 crossing over, and then being all at the same area, you know that's a log. That's a huge log. You can enter literally anywhere and you still be safe. The price might not actually come back and take you out. You understand? But then just don't trade without stop losses. I do trade without stop losses because I know my work, and I know when to trade without stop losses and when to trade with stop losses. So just be very careful of that. So after having noticing this, the price came and broke below that support. So this is my point of reference right now. So right now I wanna look at this and highlight this as my next following. If price breaks below, I want to take this as my next entry area. So what does price do? It comes below, breaks below. It didn't quite come back and retest that. But then for me, because this is Friday, I cannot continue the trend on Friday. Friday I'm expecting a reversal, so I can't take any continuation of short positions here unless if the ever price came back to this, maybe this highs here after this crossover at 15 to 200 and 800. If it crossed over like that and came back like this and then came back to retest that area, any of these moving averages, I would more than happy sell it. But then if it's like there, nowhere near any Fibonacci retracements or near major support or resistance, I'm not taking any short positions. I'll just let it be. But of course, I'll after I enter here, price goes 20-30 pips up, break even, eliminate the risk. It does this, give me a small retracement, which is level 170 trade. After coming back and doing that, like after it takes out the previous low there, I'll put my stop losses here. It comes down. There's not a significant level, but then because of it's been moving very strongly, I'll just put my stop losses below, not below, above every retracement. Put stop losses here, comes back, retests, and then breaks below here. Put my stop losses there, gives me that, and then it's Thursday. I'm 1, 2, 3. I will start thinking of taking partial profits. Not everything close everything. You know why? Because of it's in line with the trend. So and then remember, after noticing that we've already got that break even 52, not break even actually, crossover 50, 200 and 800 crossover. You don't want to close anything here. Just let it run. If it's, you enter, you should be able to enter position even if it's right here, because of you've already seen 50, 200 and 800 moving average crossover. You enter, and then this is a point of reference for me. This is my point of reference. I will wait for Tuesday, Wednesday. Tuesday didn't give me that, but I can see it's clearly going up. So I will wait for a proper entry in that area. I'll put my pending orders there, and then my stop losses I would put them just above those 800 moving average there. What it does, it comes back and it released there. On that Asian session, it gave us that, and then it didn't quite come back to those levels again. So if you don't have your pending orders, you're not gonna be able to take this position because of this was already we in South Africa we were deep asleep because it was about 3 to 4 a.m. in the morning Asian time. You understand? So around those times we fast asleep. So if you don't have your pending orders, the startups that you always gonna miss. So make sure that if you see a high value area like this one here, after noticing that here price might actually come back, as you can see it's level 1, level 2. It's Monday, give us level 2, and you expect the price to come back on level 3 on Tuesday. Put pending orders there, so that you're not gonna even think twice when price, because when you don't have pending orders, if price comes back and then you sometimes or maybe quite often you will be reluctant to take this position. You will still wait for confirmations. For me personally, if I see a high value area, I'm not gonna even think twice. I see I have a high value area, I put my pending orders, and then I go look at another pairs. I've put pending orders, and I've also put stop losses. If ever I was wrong, I will get stopped out on negative, maybe negative 5% or negative 10%, depending on how much risk I'm comfortable with. You understand? You see that you put pending orders, it comes back, it plays around that area you already in. When you wake up in the morning, you look at your you look at your you open your MetaTrader, you're like, okay, our orders are filled in, you just break even. And you know what I like to do? I'll break even and then I'll monitor it, break even, because if ever it starts showing, but it might actually irritate and stop me out again before going down. I would break even and then put furthermore pending orders right where I've entered, or I've put my break even. Excuse me. So I'll just re-enter again or put more pending orders there. So another one, level 1, level 2, level 3 in 2 weeks. So from the lowest price of the previous month, we got level 1 correction, level 2 correction, and level 3. So this was level 3 with regards to market makers. After 2 weeks of rise, and it's Thursday midweek reversal, there's a harmonic pattern there, there's continuation pattern, there's major diagonal resistance there, and there's also major support and resistance, horizontal or support and resistance. So this is a high value area. You see it, you take it, you kill it, and then you maximize. You get paid. If ever you see it today, you make enough profit to last you for the next 3 months. You take $100 account to 1,000, you make 1,000% return on investment. People say it's impossible, then it is. I'm telling you right now, it is very possible. Guys, you should never be afraid of risking. You know why I consider myself as an aggressive trader, and then as somebody that's gonna make huge, I'm talking about hundreds of millions, you understand, or tens of millions. But then I want to be a billionaire. I'm not a billionaire yet, but then I believe that I'm I'm heading towards the right path because I'm very consistent, so I don't have any worries, even if it happens after 10 years. But the fact of the matter is that I will die with loads of money in my bank account, and yeah, that's it. So you're gonna be able to take positions that are gonna pay you awesomely, you understand? So you see, like that, with so much confluences, don't get confused with all these movements. Know where the price is going. Look at your high value areas and then put your pending orders. After having noticing this, I know that this level 1, level 2, if price breaks above that, it's obviously going to issue me a level 3. So that from the previous high price of week, I need to measure my Fibonacci. So from that high to this low, X, A, B, C, D, that is my D completion. So in terms of Gadley, I need to make it a point that no, it's not a Gadley, it's a total, as I can see. It's not a, because remember we have a Gadley total and then bad. Gadley total, bad. They're almost similar, but then they're actually not. You just need to know precisely which one retraces from, and then where it extends from. Yeah, that type of thing. So I hope that makes sense. This one, okay, this one doesn't have a lot of confluences or convergences, and this one also looks good. There's harmonic pattern, there's a breakout there, and then there's two major resistance areas. There's diagonal resistance and horizontal resistance. So some other trades you're not gonna be able to take them properly with pending orders. Otherwise, this one you wouldn't have been filled in. Personally, for me, I'm already filled in around this area here. I'm already in here. Okay, let me see when that was. Okay, it's this one. Yeah, like as I said, this area here, it's this one. So we're already filled in here because you already had pending orders around that area. So we're in here. So no worries. If you were not able to take this short position, this cipher here, it's okay because you're already in from Thursday midweek reversal and then first week of the month. So imagine how you're able to enter at that high price of the month, and you're also able to exit at that low price of the month. So on average, you should know, maybe on GBP on average you have like on average with regards to the monthly range, you have something like 600 pips. So 600 pip average monthly range. So from this high to low prices of month, on average you're gonna have like 600 pips. So you know that you've made 600 here, 550 here, maybe 350 here, and then 320 here. So it's, even though it's a 650 pip movement from high to low prices of the month, but you've accumulated like 2,000 pips. So it's very important to enter. When you get the retracement, enter. And then another thing, to grow your account, don't trade the long term with small accounts. If you have a $100 account, enter here, take some partial profits here, re-enter, take partial profits, re-enter, take partial profit. Every week, every day, make sure you take a lot of something every day to grow your account every day, you understand? But then at the same time, hold some positions for long term. What I do personally to grow a small account, I would enter like so maybe 2, 3, 4, 5 mini lots, or 5 mini lot, or not 5 mini lots, like I would open, or not mini lots actually, 1 micro lot and open 5 positions, or open 2 micro lots with 3 positions, and then along the way I would close 1 position at a day, 1 position at a day, 1 position at a day, and at the end of the week you'll find that the first trade I made like 60 pips, second trade 120 pips, the third trade like 200 pips. You see, so it's very good, risk ratio and trade management. So you're able to enter here. You also take this Friday midweek reversal after that breakout, and then you also enter here, you took your profits here because it's level 1, level 2 in 1, 2, 3 days. It's 2 levels in 3 days. So but then you already know there's a Thursday midweek reversal, and then there's also major resistance there, support rather. There's major support. So on that area there, that's where you should start looking to take partial profits with regards to monthly, intra-month cycles. So that is very important. So it's the same setup here. This is this, man. It's the same thing. So but we were able to take positions here because remember this was the third level in 2 weeks, and then what else was there? What else was there? There was also harmonic pattern there, flag. So this was a major high value area. You understand? So this one again, it's a very good one because it's like level 1 correction, level 2 correction, level 3. So for me it's 3 levels in 2 weeks. So not only that, there's a harmonic pattern, there's a flag pattern, there's also major resistance there. So ladies and gentlemen, remember, we're not gonna trade everything. We're only looking to trade one thing all the time. If you don't, that is why we do not trade every day. We look at the charts every day, but we don't trade every day. We wait for our setups. We analyze the markets and we see high value area, and then we identify that. We wait for the price to come to that area. If the price doesn't come to that area, we do not enter. Why? Because we don't want to take premature entries and get stopped out too often. We only enter at high value areas. In that way, then you'll be able to make profit even if everyone is losing, because you don't trade every day. You only trade high value, high probability patterns. So which means, out of 10 trades, you're gonna be able to win 7, 8 positions overall. You understand? So those are very good statistics. So this one is also very. Can you see how much this is the same thing over and over and over and over? Like you do the same thing over and as long as, or maybe given that, as long as you understand the market maker cycle, then everything else comes on top of it. I hope this makes good sense, ladies and gentlemen. If you understand your market makers properly, then everything else is just a small piece, or maybe a walk in the park. You understand? Because as you can see, this was Friday, and then not low price of the week, but then this was the Friday. Okay, this is the not low price, but then we got our Thursday midweek reversal. So from then, this is not my midweek reversal because I got the stop hunt and I also got the reversal. So from this low here, I'm just gonna count levels from that. So it's anchor point here, level 1 correction, level 2 correction, level 3. So this is a 33 trade, three levels in 3 days, and then there's good the left shoulder. It's it's all, or it's on the same area where the right shoulder is. So when you see the left shoulder there, this is where you want to take your short positions on your right shoulder. Before it even comes to that area, you've already identified this area, because of that is where the left shoulder is, and then more than likely the right shoulder is also come within that area there that the left shoulder is at. I hope that makes sense. Not only that, the continuation pattern, a flag, and then left shoulder head and the right shoulder moving average, 50% to 618 Fibonacci retracement in line with the trend. So for me, that's a kill. You see it, you take it, you capitalize heavily on it, you get paid for the next coming 3 months on this one setup. As you can see, from then onwards, it gives us a nice rally. And then if you know how to properly use your pending orders, guys, this is a breakout. This is a breakout here, because you see it's a nice rally, accumulation, stop hunt. So if you had your pending orders there, you should also put your sell stops here. You have your sell limits here, sell stops below that low, because it's gonna continue with this trend going south. Why would you wanna? Why wouldn't you wanna kill them if you are able to manage? If you are able to capitalize or kill them here, why don't you wanna kill them here again? Because we know the order flow system. We know how institutional order flow works. These guys, it's like an order system. They use pending orders. It's their system. Let's use it against them. A taste of their own medicine. Now we know about it. We don't let them escape. We don't let them breathe. Means. I hope that makes sense. So otherwise, let me just continue with that. I see I'm getting too excited. So after having seen that, we see retest. So if you see retest and you know that it's gonna break below again, you put pending orders here, sell limits, and then sell stops below. You see, it's easy. Sell limit, sell stops. Sell limit, sell stops. Sell limit, sell stops. If it comes back like this and you know it's gonna break out, you don't leave the breakout. You don't leave a breakout because here it's confirmed. Maybe if you were reluctant to take a lot of positions here, you might take, maybe if you have a good account, maybe you have like $1,000 account, you might take 2 or 3 2 mini lots positions. I like 2 mini lots. You take 2 mini lots, 2.0, like 2 positions to 3 positions. It goes below here, you break even. Now right now you up like per position, you maybe per position that you've opened, you up like maybe $200 or 150. Now you're in free trades. You've already broke even and you've already secured some profits. Don't be afraid to take 5 mini lots here. You take 5 mini lots here. I'm telling you, do it. Take 5 mini lots. 5 mini lots, 5, 10, 15. And then when it comes to these levels here, you're already up about, from $100 or from $1,000, you're already up about 100%. It's like 1, 2, 3, 4. You're over 100% in 1 week. You're over 100%. Dude, I don't know. I've never heard of any financial institutions that give you like return on investment 100% in like a week. That's good money. If you ask a lot of traders, they tell you it's impossible to make 100% per week consistently. But I'm telling you, you actually can. For me personally, I make a minimum of 50%, minimum 50% per week. So if I make 50% per week minimum, I'm happy. I'm happy with that. So I'm telling you, ladies and gentlemen, you can make a minimum literally of like 100% per week or maximum of 1,000% a month. I've done that tons and tons of times. And then when we started trading with my friends, they were like, "Nah, Joe, you can't do it. You can't do it." But then I was like, "These guys, why are they saying it's impossible?" You understand? So they're like, "Nah, man, nothing is impossible, man. This is just a game, man. It's like playing." And I don't know what type of a game. But for me, when I started with this trading thing, I knew that for me this was a game. Ladies and gentlemen, I've played far more difficult games than what I'm doing right here. So for me, before I got into it, I knew this was gonna very simple thing that I've ever did. And I'm telling you, to this day, it's the most simplest thing. It is very difficult because it's an emotional roller coaster. You understand? Sometimes you'll get broke, and especially when you're just starting out, you lose a lot of money, and then you even think of quitting, but you shouldn't, because you just need to have a mentor, somebody like me, somebody that understands these things, somebody that has a trading edge, somebody that will come to you and tell you about something that you're not gonna get from all these gurus out there. You understand? We don't need anyone to show us their money or sell us the trading lifestyle. No, we don't want it. We want the actual trading. You understand? We want to see how you analyze your markets, how you make money, how long you hold your positions. Are you a trend trader? Are you a position trader? Are you a scalper, or whatever the case may be? We just want to see that. How good are you? Peeps don't lie, ladies and gentlemen. Don't show us your fake lifestyles and whatnot. So we're only interested in trading what we see, and which is very consistent. That's what people are looking for. You understand? So after watching this course, ladies and gentlemen, and then if ever you don't find, or you're not consistent with this course, in 3 months, ladies and gentlemen, you have a problem. It's not me, it's not the system. And then I'm telling you, you will try different types of different methods of trading, you'll never go through if you cannot understand this, because this is advanced trading. For me personally, I have never met anyone that trades market makers like I do. You understand? So I am very confident, and then I don't know, not overconfident, but then I know my work, ladies and gentlemen. I did this from scratch. Steve doesn't tell us about intra-month, intra-quad, intra-year, intra-5-year, intra-20-year cycles. No, he doesn't do that. And then the other thing, there's a lot of things that he puts inside the template, which is honestly doesn't add a lot of value into your trading system. You don't want to use a lot of indicators that prevent you from seeing really good setups. Use only what you know works. You understand? So let me not waste time. And then I think, ladies and gentlemen, let me just go back to our slides. I think we've covered everything with regards to confluences of technicals. Let me just go back there. With regards to high probability trading, currency setups, entries, exits, and confluences. With regards to currencies, ladies and gentlemen, I want you to trade the dollar across the board.
dollar is that one currency that is most consistent with the market maker cycle. Anything that has to do with the dollar, okay, I'm just gonna count them for you. The dollar across the board, the dollar exotics, gold, not gold, all the precious metals goes because they have dollar with them. They have dollar as the secondary code currency. And then what else? Nasdaq as well. And then what else? Basically anything that is based in the US, ladies and gentlemen, it follows market makers consistently. So don't try to I love the dollar. Let's say, ladies and gentlemen, the dollar pairs have been so good to me. I know each and every single week I have to, within these six currencies. Let me just do this. There's the Canadian dollar, American dollar. Mm. So okay, let me just do that. Look at it this way. You see, I have six currencies here. Within these $6 currencies, there has to be two that I'm gonna have to kill any given week. You understand? So even if you don't kill them or all of them, but then there's gonna be one that you're going to kill, ladies and gentlemen. You're not gonna get stopped out on all of them. Why? Because they are very consistent, ladies and gentlemen. So we're only looking for consistency. If you can be able to identify setups or pairs that are consistent, only trade that. Do not trade something that you're not sure whether it's consistent or no. I don't want to trade something that is consistent half of the time. No. Remember, ladies and gentlemen, we're trading here. We're working with big money, so we're not gambling here. You have to know your probabilities. You understand? This is a numbers game. So if you don't know that, then you're gonna have a very short trading career, unfortunately. So let me just go back to your slides there. So in terms of currencies, the dollar is the most consistent currency across the board. The setups I've shown you: technical confluences, market makers confluences, and market makers technicals and fundamental confluences. But I'm still gonna get into fundamentals right now. And then the entries, I've seen you high value entries and exits. When you exit, you wanna exit at an area that is a high value area as well, and then that is okay. Let me put it this way. I've told you about my golden Fibonacci entries and exits. So you enter at Fibonacci, you exit at Fibonacci. You enter at moving average, you exit at moving average. You enter at stop hunt, you exit at reversal. That's it, man. It's as simple as that. Exactly where you enter, it's gonna be exactly where you exit. If you enter at lowest price of the month with the second week Tuesday stop and low, you're gonna exit at the highest price of the month, which is the fourth week Tuesday stop and high, Tuesday Wednesday stop and high. When you enter, it's exactly where you're gonna exit. I hope that makes sense. So confluences, you've seen them: technicals, market makers, and fundamentals. So let's get into fundamentals, ladies and gentlemen. So okay, let me just get a glass of water real quick. So right now I just want to show you how to incorporate fundamentals in your trading. So the first things first: Monday morning or Tuesday, whenever you wake up or whatever you want to take a position. First things first, because now you have your profile set up, you want to go to Light Forex. Light Forex is a broker that will give you all the major currency indexes. You understand? Because I understand a lot of people only know the dollar index chart. You understand? So this is the dollar index, and then this is the euro index. This is the pound index, Switzerland franc index, Japanese yen index, Canadian dollar index, Australian dollar index, and New Zealand dollar index. So before you can get into anything, like what I do, I would just look at how the USD index is behaving, and then this will give me how the dollar is going to behave across the board. You understand? So by just looking at this, I can conclude that the dollar has been bearish for the past 1, 2, 3 days. You understand? The dollar has been bearish for the past 3 days, since last week. Since last week Tuesday, since last week Tuesday, Wednesday. Yeah, I think this was Tuesday. This was Friday, and then Thursday, Tuesday, Wednesday. Yeah, Tuesday, Wednesday. So from Tuesday, Wednesday, the dollar has been very bearish. So since last week, I had to sell the dollar. So After noticing, after having analyzed the USD index, then you go to your trading charts. You open the dollar there we go. Now we're in the dollar profile. Then we can conclude the dollar is bearish. As you can see, it's been bearish from last week. The dollar is bearish. It's bearish here. It's bearish there. It's bearish here. It's bearish here. And it's also bearish here. So let's go to another pair. Let's go to the euro index. The euro, how has the euro been behaving from since last week? It's been bearish from since last week. So let's go to the euro profile and see how the euros are behaving. There's our euro profile there. The euro has to be bearish as well. Okay, because the dollar has been weak, so the euro, it's a little bit, it's gaining strength only on euro USD. Remember, they're both weak, so that is why it's been ranging here like this. You should have a clue why is certain things happening. So let me just put in my euro dollar euro USD. There we go. So like, as you can see, I have my analysis already there, but then the euro has been ranging for quite some time. Why is it that? Because the euro is weak, and the dollar is also weak, you understand? So it's not going anywhere. It's still gonna range like that. And then euro sterling dollar, it has to be bearish like this. As I said, euro CAD, it's bearish, as you can see from last week. Even this one is bearish as well. Euro NZD is also bearish. Euro JPY is also very bearish. So let's go to the light forex again and check out how the pound is. The pound index is showing us a nice spike to the downside last week, Tuesday, Wednesday. So let's see how that has turned out in our trading charts. Let's go to the pound profile. GBP/USD, same thing. It gave us that nice dip there. So let me just load the GBP/USD analysis. GBP/USD, there it is. GBP/NZD, there's the pin there. GBP/JPY, there's the pin to the downside. GBP/CAD, the pin to the downside. GBP Australian dollar, GBP on the upside. I think you know why. It's because of the Australian dollar was very, 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 very weak here. You understand? So when it was weak like that, instead of GBP going downwards, it went upwards. Because the Australian dollar was very weak. I'm gonna show you what I'm talking about. I'm not just assuming that it was weak, because I have the light forex. I can see how all the index charts are behaving across the board. You understand? So the only reason why GBP Australian dollar gave us sort of like a pin to the upside is because of Australian dollar had problems, not because of the GBP, because of the Australian dollar. GPCHF, it still gave us the same thing, but why is the GBP AUD gave us that pin to the upside? Let's look at what the Australian dollar did. AUD, you see what I'm talking about? The Australian dollar was way weak. It was too weak, so it gave us that pin to the downside. So if it's weak like that, the GBP AUD definitely is going to give us pin to the upside, because why? Australian dollar is very weak. You understand? That is my point. So when you know how to use, this is fundamentals, ladies and gentlemen, because you look at one thing.
Incoming mail.
It's talking about one thing across the board. So when you look at Australian dollar like this and you see that it's been bullish like that, let me just go to the Australian dollar profile. Australian dollar, from since Tuesday, Wednesday last week, it's been bullish. It gave us a pin or to the downside, and then it's been bullish since then. So it gave us a pin to the upside because it's GBP AUD. Otherwise, it could have been if the Australian dollar was the primary currency, we were gonna have a pin to the downside. So Australian dollar, because in this case it's the base currency, pin to the downside with this as well. Pin to the downside with this as well. Pin to the downside with this as well, and pin to the upside. Exactly. Understand? So let's look at another one. That is how you should look at your that is how I consider my fundamentals. Because if ever, like, first things, what I do when I wake up in the morning, you look at your economic calendar. by looking at your economic calendar, you only want to look at high impact and medium impact news. You don't look at low impact news, and you don't look at news that affect currencies that you do not trade. Because I trade USD, I want to look at the dollar news. Because I trade euro, I want to look at euro, GBP, CHF, JPY, Canadian dollar, Australian dollar, NZD, and exotics. You understand? Exotics, I'm referring to the South African rand, the Turkish lira, Swedish krona, Mexican peso, Norwegian krona, and Danish krona. You understand? So when you look at news, just look at the economic announcements that only affect the currencies that you are looking to trade. So after noticing that, okay, today there are gonna be news on the Canadian dollar, you go to the Light Forex, and then is it Light Forex? Yeah, it is. Okay, let me just do the Light Forex. Yeah, it is Light Forex. So let me just go to index charts. So in this case, we have high impact economic news on Canadian dollar. Let's say on New York Open. So we know that the precise time that the Canadian dollar is supposed to be moving today. So it's New York Open, and then what else do we have? It's like high impact news. So first things first, we go to the Canadian dollar index, we look at it, and then we analyze it. We analyze it, trying to look at where the Canadian dollar is likely gonna, go to. I'm just giving you an example. There's no economic news on the Canadian dollar today. First things, you look at what you see, what you can be able to identify first. So we can see there's a major support and resistance of that area. Here's two areas where the market is likely gonna retrace to, on that area there. So what I'm gonna do, I'm just gonna shade that real quick. Let me just, what's happening with you? Let me just remove that, and then okay, I'm just gonna copy that right now, put it there. That is my first, my second value, high value area. This is my first. You first draw what you can see, you understand? So let me just do that. So obviously now we know that we have Canadian dollar news on New York Open today. So what do we expect on New York Open? We should expect a spike to the upside. To the upside. And then continuation with the downtrend. Because remember, we are trend traders. We're only interested in trading in line with the trend. So that's what you should do. Let me just copy that, and okay, just gonna put that there. What's happening? What's wrong with my thingy here? Okay, let me just put this here. Yeah, there we go. Yeah, so this is my first high probability area, and this is my second high probability area. So if price stops me out here, then definitely from this area I'm gonna kill it. But for me personally, if it comes and to this area here, then for me personally, I would wait for this one. I would just wait for this one. So right now I'm just gonna whip my Fibonacci and measure the retracements. This is 618, and then this is 50%. So this 618 here, I'm highly interested in taking positions from that area there. So this is my first line of defense, and then this is where I don't compromise. I might get stopped out maybe 2 positions here, but here I'm gonna enter like 10 positions. So I hope that makes that makes sense. So when you look at your Canadian dollar index like that, so we're already expecting continuation on uptrend and then reversal.
continuation of trend for like let me see how many pips. 70 pips. So now that we've made a conclusion on the dollar index, remember we haven't looked at market makers, we're only looking at technicals right now. And then technicals, we have major support, horizontal support, and horizontal support and resistance area, and we have diagonal support and resistance, we have moving average, we have ATR there, we have Fibonacci there. So there are 4 confluences there with regards to market makers only. So 4 hours, there's nothing there. And then daily, what else do we have? Do you have any significant breakouts? Let me just draw from this low there. No, we don't. From those highs there, now we have actually we don't have anything there. So for me, I would just wait for price to come through these areas, not this one, the second one. So after having done that, now we go to our trading chart. We go to the Canadian dollar profile. Canadian dollar profile, there it is. Our first, it's almost the same thing, can you see it? So this was my first high probability area, but then now that my mind has been changed, so I'll be looking to take positions here. This is Canadian dollar CHF. So let me just change that color into red. There we go. Or the price might likely just retrace from here. It's the same setup, you see. Let's go to Canadian dollar JPY. What do we have here? Canadian dollar JPY. Okay, let's just start with our trend line to see where the trend is going. So we're just gonna do that. Change that color into black because all my trend lines are black in color. Just gonna zone that out real quick. So this is very fast, so I'm not looking into taking any positions on the Canadian dollar. Okay, let me just look at horizontal support and resistance. Okay, we might have something here. Okay, let's go to, no, we don't have much there as well. So we only have support and resistance and ATR. So let me just outline that, just put it in a pink color to signify that you're going south from here. Pink. There we go. So with regards to Canadian dollar JPY, I would also like to see this happen. Because remember, the Canadian dollar, before it goes bearish, we first need to see an up movement, and then from then on we can conclude that it can go downwards. But before it goes downwards, it needs to go up first. Only look at high value areas, ladies and gentlemen. And then when after finding all of them, you don't need to trade all of them. Just look for one that has very high probability. EuroCAD, obviously it's going south, because Canadian dollar in this case, it's a secondary currency. So let's just draw those trend lines from down there. Okay, let me just move there and drag this ones. Yeah, from there. And then this one as well. So this is just a quick trick to show you how to use, the light forex index charts to, kind of like create a bias as to where a certain currency is going across the board. Because for me, I don't regard to my setups as, I'm taking a position on GBP USD or Euro USD or USD. No, I'm gonna tell you about the USD across the board, the Canadian dollar across the board, the euro across the board, the pound across the board. That is why I'm able to trade everything. Like if ever I'm trading the USD, I'm gonna trade all the USD base pair. USD CAD, USD JPY, USD CHF, GBP USD, Euro USD, Australian dollar USD, USD ZAR, USD NOK, USD DKK, USD TRY, USD
RUB and so forth. You understand? Everything that has to do with USD, then I trade it literally because I know how the dollar is behaving across the board. So when you look at the dollar and then you have a bias on it, and then you look at the Canadian dollar, you have a bias for it, then you know where the USD carry is going. That's it. Look at the dollar index, look at the Canadian dollar index, then already you have a bias on where the Canadian USD carry is going. Look at the euro index, and then look at the Canadian dollar index, then you already know where the euro carry is going. Look at the Japanese index and look at the euro index, you already know euro JPY, where euro JPY is going. So that is it. The trick is knowing where one currency is going across the board, and then you'll be able to analyze and then get a proper entry area. So remember, first things first, you look at your economic calendar, you see what's trading today, what's trending. You see it's Canadian dollar, you go to the Canadian dollar index, and then you analyze the whole thing. Then you go to your profile, you analyze all the currencies that are on the Canadian dollar profile, or the euro profile, your United States dollar profile. That is how you do it, ladies and gentlemen. Don't confuse yourself. Don't look at fundamentals. Let's say like, I want to trade NFP. No, you don't do that. You know how the market maker cycle is. You know you're expecting on the first week of each month, you're expecting Thursday midweek reversal or Friday NFP reversal. You understand? And then across the board, you know how the dollar is supposed to be behaving, because you've looked at the dollar index chart, and then you know how it's going to be. Let me show you a trick on what happened on NFP on Friday, first week, January 2019. So right now we're just gonna go back to the light forex and the dollar. So you see what's happened here. So if you were able to identify this move here after this 15,200, these are cross bounds, ladies and gentlemen. As you can see, we got a 15,200 moving average crossover, and then it broke below, it came back to retest the 50. These are cross bounds. You got the 13 and 50. Remember, first crossover is 3 and 13. It's 3 and 13 first crossover, and then 13 and 50. Here it is right here, 13 and 50. And then after that, after 3 and 13 moving average crossover, we need to come back and retest the 13. Here it is, it came back and retested the 13. After 13 and 50 moving averages, we need to come back and retest the 50. After 15,200, we need to come back and retest the 200. After 200 and 800, we need to come back and retest the 800. So what happened here? We got the 3 and 13 moving average crossover. Price came back and retested the 50 moving average. So when you see this, and it's NFP, and then this is a USD index chart. So let me just do US index. Let me just put that right there, and then take that a little lower as well. And let's take it back to 1 hour. So after noticing this, because I was expecting for a reversal here after level 1, level 2, level 3 reversal here. So I had bought most of the dollars, and when it goes up 20-30, I break even. It took me out. It's okay. I got taken out, not on a loss, but on break even. You understand? So no loss there. But then otherwise, look at it this way: 50 and 200 moving average close, 3 and 13, and then coming back to retest the 50, 13 and 50 rather. Excuse me. 13 and 50, and then coming back and retest that 50 moving average. So right there, you should be taking short pause because it's NFP. What time is it? It was New York Open. Let me put it there. Let me show you. This was between 2 and 4. New York Open. You see, on the 15 minutes, we have that 200 moving average crossover. Right after 15,200. 15,200, but price comes below, it has to come back and retest that 200. If we get 3 and 13 moving, I call that cross bounds. We get 3 and 13 moving average crossover, then the price needs to come back and retest 13. That's a sell. We get 13 and 50 moving average crossover, the price needs to come back and retest that 50. Then we get 50 and 200 moving average crossover, the price needs to come back and retest that 200. We get 200 and 800, the price needs to come back and retest that 800. That is it, ladies and gentlemen. After you get 50 and 200, the price. If it comes back and retests the 200, you kill it. And it did exactly that. New York Open gave us that, and it came back and retested that. So this is a huge sell. You sell it there. Let's see how the dollar behaved across the board on the dollar profiles. It's the same. You see how the dollar between 2:30 and 4, it gave us this was 2:30 and then 4. It gave us that touch there, and then came back and retested. So it's like an M formation, and this was the highest price of the day on that moving average. So let's go to the dollar profile. Let's open that. Let's go to the dollar and open it across the board. Okay, this was Friday, right? So let's just open there. Exactly between 2:30 and 4, it gave us that USDCHF Japanese yen. Let's go to 15 minutes. NFP, what happened? We didn't get any significant moves on the dollar, on the dollar yen, and then on the USD CAD we did get something here. As you can see, there's a pin right there. I know some people that were able to enter here. They took this position here, but I was just unable to. But it's cool. It's cool. We lose some, we win some. Okay, let me just do that. As you can see, between 2:30 and 4, the dollar went south. Let's go to 15 minutes. Between 2:30 and 4, the dollar went bullish. Let's go to 15 minutes. As you can see, on Friday it didn't exactly give us an exact entry timing, but then within that New York, it gave us a nice reversal. GBP USD, I think this one gave us a very good one. I think this was a little later, but it was definitely around that, New York reversal times. Yeah, so there it is, ladies and gentlemen. 15,200 coming back to reset the 200. Like, it's a cross bounce, ladies and gentlemen. You can be able to take very good high probability trading setup, looking at moving averages, like properly understanding the relationships between moving averages. You'll be able to take trend 18 moving average crossover and then the cross bounce, 13 and 15 moving average crossover and then the cross bounce, 200 and 800 moving average, 15 200 moving average crossover and then the cross bounce, 200 and 800 and then cross bounce. You'll also be able to take level 1 safety trades and then cross bounce. Like, it's on point. You can be able to trade and be very consistent, make good money with just from trading just moving averages, ladies and gentlemen, understanding them properly. So guys, I hope you'll be able to to incorporate this fundamentals properly. Trading, you don't just look at one economic announcement to then be like, I'm gonna trade this GBP USD. No. You first look at the currency index, then you'll be able to identify where the whole that particular currency, the bias of that particular currency across the board. I hope that makes sense, ladies and gentlemen. So let's go back to our slides so that we can be able to conclude what we're just talking about right now. Let's go back there. So I hope, ladies and gentlemen, that made sense. You should be able to identify your high probability trading currencies, setups, entries, exits, and confluences. This is, if you are able to do all that, you don't need to look at a lot of things. Just look at the dollar across the board. For starters, look at the dollar. Open a dollar index chart on Light Forex. Create a dollar profile with 6 pairs. Trade only there. Look at how the dollar is behaving. Look at your fundamentals. The economic the economic news is either from Forex Factory or my what do you call them? My FX book. So you can look at my FX book or any other economic calendar that you a reliable economic calendar. So you can just look at that. So we did that. We covered continuation, simple patterns, continuation, reversal, symmetric. You can use that. Remember, it's simple patterns. Continuation patterns can be your flags and pennants. Reversal patterns is your head and shoulders, double tops, triple tops, or bottom. Symmetric could also be your what you call your triangles, because we have ascending,
descending and a symmetric triangle. So symmetric basically are patterns that you can break out on either side, the upside or the downside. And then we also have harmonic patterns. We have Gartley, Cypher, Bat, Total, and Butterfly. I trade all of them. We also have support and resistance. We covered trend lines and trend channels, Fibonacci, golden Fibonacci retracements and extensions. We also covered moving averages. So with regards to technicals, now we know which technicals we should be concerned about, and then which confluences should we look at, and so forth. Market makers, we've seen the accumulation phases. We've looked at intraday, intra-week, intra-month, intra-quad, intra-year, intra-5-year, and intra-20-year cycles. So let me show you, before we conclude this chapter, I didn't cover the intra-quad cycle. Because remember on this section here, we talked about intra-day, intra-week, intra-month, intra-year, intra-5 years, intra-20 years, and levels. But we didn't really get into intra-4-month cycles or the quad cycle. So I want to show it to you real quick right now. So let me just get it here. Let me just open that for you real quick. Okay, let me just close that. Yeah, here's our intra-quad cycle. This was November 2017. This was accumulation phase. December 2017, stop hunt, long sustain run. January, February, reversal. March 2018, this was accumulation, and then April 2018, stop hunt, long sustain run. So I took this one. I wasn't able to take this one, but I definitely took this one. Understand? I remember taking this one. I also took this one. So 2018 was a very good year for me. Accumulation March 2018, April 2018 stop hunt, and then long sustain run. May gave us a nice crossover there. 50 and 200 moving average crossover. It's a cross bounce, and then coming back to retest the 800. That's the cross bounce. And then after noticing, you can take positions here. Excuse me. And then also there as well. November 2017 accumulation, December 2017. Everyone that had bought that sold here and here, they got stopped out with this pin here. They got stopped out because this was the interquad stop hunt and then long sustain run. And then January 2018 price reversal. Look at it. This was gold. This was USD CAD. This is GBP Australian dollar. This is GBP AUD. So accumulation March 2018, April 2018 stop hunt, long sustain run, and then reversal June 2018. Accumulation. This is GBP JPY accumulation. When this was March, April 2018 stop hunt, long sustain run, reversal there. And then on the last week of the month, actually last month. No, actually, what am I saying? No, it's okay, but as you can see, we got our reversal on the third month. As much as we can get our reversal on Thursday, or on the third week, or on the third month, we can also get our reversal in the third month. Yeah, that's it. Because this is 1, 2, 3, 4 weeks. 1, 2, 3, 4 months. So there we go. Fortunately, you'll be able to get this document, and you'll also be able to read everything that I have here. So you'll be able to, basically see what I mean. Also have our trading rules in here. Let me just show you some of my trading rules. I also have some of the setups that I was able to enter. You'll be able to see how I got in. It's very simple and straightforward. Tuesday stop and low on top of the 800 moving average. You take it, you kill it. Here's another one, guys. This is super consistent. This is very good, guys, man. So just study this, and then be profitable and make money. So I want to show you entry rules. Like, this document has everything. Every trading currency, high value trading areas, high value trading pairs, high value trading times, and so forth. High probability trading setups and categories. The market maker cycle trading rules always protect your trading equity. No revenge trading, no leveraging accounts, no over trading, no premature market entries, no trading without defined stop losses, no trading every day. You have index there, trade management, how to break even, book profits, and how to close manually. And then different types of trading, trade durations. We have intraday setups, which could take from 4 to 8 hours. When you're entering the money during London, you close during the New York reversal later in the afternoon. You enter stop hunt Tuesday, Wednesday, you close Thursday, Friday. You enter on the first or second week, you close the fourth and the fifth week. Yeah, that's it. Our targets, it's moving averages and trend lines, support resistance areas, Fibonacci extensions and retracements, Fridays as midweek reversals or the fourth or fifth weeks of a month. Stop losses 50 pips maximum. Guys, this you just need to have this. So, but then you're gonna get it because you guys are paying for these things. So let me just go back to our slides so that we can be able to proceed. The market makers, we've done that. So right now I'm just gonna show you how to draw. Okay, I'm just gonna show you how to draw the market maker cycles from scratch, and then basically how you'll be able to do all these things by yourself, from making properly how to create your analysis from scratch. Understand? So I'm just gonna take a short break, and then I'm gonna come back just now. And then right now we're gonna get into how to draw and make your analysis and how to anticipate. So in this slide I'm gonna show you how to do everything from scratch basically. So including how to opening your economic calendar and so forth. So